Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. I am apologizing for being about 15 minutes late. I do apologize for that. I do not like it when I am this late, so do accept my apology. But here we are. We got a bunch of earnings to talk about. We got a comment from the replay of our live show yesterday about a company, so we're going to look at that company as well. I'm going to do my opening monologue about the market and what I saw today, and we're going to run through a list of stocks that had their earnings today. And there's a few that I want to point out specifically. So we're just going to get right into it. But remember, the most important thing about this live stream is what's on your mind. So if you have a question, leave the ticker symbol and your question in the comments, and we'll go over it live during the show. So make sure to do that, and let's get started. So both the S&P 500, which was up 0.4%, and the NASDAQ, which was up 0.8%, hit a fresh record high today, boosted by gains in retail and especially technology, as markets expect for expectations for a sooner rate hike from the red was dashed with cold water. So that's out the window. We talked about that yesterday. Also yesterday about the Fed, they did announce that they are expected to reduce their stimulus, but signaled no hurry to raise interest rates while reiterating inflationary pressures are likely to be transitory. And we've talked about that word transitory. I think it's lost its meaning by now. On the corporate front, though, Qualcomm and it rallied about 12% or so today following an earnings beat. But Moderna, their shares are down about 18% or so after the company cut its 2021 forecast for COVID vaccine sales. On the data front, initial claims fell more than expected to a pandemic low, while labor costs soared above forecast. Investors now wait the highly anticipated jobs report due out tomorrow for an update on the labor market recovery. Meantime, the Dow Jones, it slipped a little bit as Goldman Sachs and JP Morgan Chase, among others, brought the Dow down. Now, one of the first companies I want to talk about is Bio-Nanogenomics, ticker symbol BNGO. I see your comment there. I'm going to get into that one right after this one, and then I'll get back to the other company I was talking about. Ticker symbol BNGO. I have the company's stock chart right here in front of us for us to look at. They were in a symmetrical triangle pattern, and this is the daily chart. So each candle represents one day. And you can see here, this is typically the pattern that you see on a symmetrical triangle like this. Once it reaches this nexus point here, where price is getting tighter and tighter and tighter, it eventually will make an explosive move to the upside. Now, they did report earnings today. They were down about 3% during the day. They're up about 2.7% in after hours, but their Q3 21 earnings did come out today, and I do believe I have those pulled up. But let me pull up this ticker symbol here. We've got REGN. All right, RGEN. Let's take a look at this. And this is from a comment here. So let me just real quick do this. So we all know what we're looking at here. All right, so let's look at this baby. All right, so we're on a daily chart. Let's get the full year's picture in. It looks like they've been in a good uptrend for most of the year. All right, so what we have is 2021 on the chart here. It looks like it had a little peak here back in January, sold off until about May, like most of the market did, but then rallied And I'm just going to put a couple of markers on here to kind of get some trend lines on here and see how the stock is behaving. It looks like it moves a lot around earnings. So there's one trend line. Let's copy this or clone it. All right, now I'm just going to move this line up a little bit to line it up with the top of the range that it was in during April timeframe, May timeframe here. My apologies. That was a March low for this company. So a March low and then a nice rally. It really picked up and moved after the previous earnings it had. It reported EPS, earnings per share, at $25.80 on revenue of $5.1 billion, beating estimates. Now, earnings today looks like EPS of $15.37, beating by 50%. On revenue of $3.4 billion, beating by 25%. So those numbers look really good. All right, so if we look at this channel that it was in through springtime and summer, broke out during last earnings, ran up here, it looks like to a new all-time high, the beginning of September, of $686.62. And then it fell hard. It gapped down, completely missing this channel that it was in. And it fell all the way to the 18th of October. But since then, it's been rallying. So that's looking good. It looks like they're selling off right now a little bit. They were down just 0.5% today and 1/3% in after hours. So they're kind of sitting flat here for the day and after hours. But a nice run up to earnings. I suspect that this will probably come back down to at least the top of this trend line right here, because the last time they broke above this trend line, they moved completely sideways. And if I put a mark on there, just like this, it's a straight line. There's kind of a top there, a straight line. I'll change the color so we have a different color there. All right, so the last time it broke above this, it traded flat for a while, but then earnings pushed it up. Then that gap down right here, and then it traded flat down here on its 200-day moving average, which is the yellow line here. So it traded flat down there. You could almost call that a double bottom, almost. And then a nice rally end of October all the way to where we are today. So it looks like there is support forming for this right around, let's see here. Let's get this line lined up. It looks like there is support right here at $636.64. I'm going to put a line there. It looks like it's come down the past few days, and that has caught it. The candle is kind of sitting on there. The wicks did dip below it yesterday, the day before, and today, but they bounced right back up above this line. So this could be a nice support area where the company consolidates. Let's see here. Let's just go over here. Nice earning beats. Profit margin has improved over the years. Let's look at the quarterly. Oh, wow. Really nice profit margin boost this last quarter. Wow. That looks good. All right. Performance-wise, though, while it looks good on the chart, over the past year, it's up 10%. Year to date, it's up 34%. The past 6 months, it's up 30%. The past month, 17%. The past week, 3.5%. Okay, so I'm probably going to say that Regeneron here is probably going to trade sideways like it did back here through the months of July, a little bit of August there. I mean, it had a very nice earnings report, but the thing about the good earnings report, I think they were priced in. It looks like the company was running up here before earnings, anticipation of earnings. It got to this height right here where the support level is, and it just kind of hung out there. And then earnings were reported, and it sold off a bit. I think that's why we didn't see a boost, a gap up, or a runoff after earnings. But it still might be possible. I don't know how many investors know about the earnings results right now. But I think there's a good support line right here, and that the support line over the next week or so will run right into this trend line. And I think that's a really good area of support for this company here. If we go and look at the financials on a more detailed look here, this is annually. I'm going to switch to quarterly. All right, so on the bar graph here on the top right side over here, the yellow line that you see going up, that is their profit margin. And you can see since Q3 20, it has been rising. A little tiny dip in Q1 21, but Q2 21, it really took off. It's at 60.31% for their profit margin, and that's on revenue of $5.14 billion. So that looks incredibly well. Balance sheet here, it's going in the right direction. If you look from Q3 20 here, and this is on the bottom, my head might be in the way a little bit here for you guys to see this, but the debt to asset percentage is dropping. It's in a downtrend over the past 4 quarters. That is really good. Right now, it's sitting at right about 30% debt to assets. So everything is looking really healthy for financials here. And if we look at the bottom right, this is cash flow. So we go from Q3 20 to Q2 21, and the investing aspect has picked up. The financing has picked up slightly, and the operating income is looking really good. Because if we go back here, Q3 2020, it looks like operating income was at a loss of 254 million. But then we get over here to Q2 21, and it was a profit, or on the positive side, of $626 million. So the company looks like it's doing a good job financial wise here. So yeah, I'd say it is looking good. I think it's got an area of support right here, and that's right about $636, give or take a few dollars, of course. But I could see it maybe consolidating a little bit, maybe going a little bit up. If it did come down, though, you've got these 2 trend lines here that I think it could fall into, but I don't think it's going to fall down into it. I think it's going to progress from where it is right now. So I hope that answers your question there. Of at least diving in here and seeing what it's looking like, and that's Regeneron Pharmaceuticals, ticker symbol REGN. Yeah, that was a sweet dip there. Yep, absolutely, especially for this run. If I measure that and look at this, if we go from the bottom where it was at the 200-day moving average up to where it is right this second, That is a 19.38% gain from that bottom to where it is right now. So that's beautiful, especially when you look long term. Then the company is only up 9 or 10% over the past 365 days. You are welcome. Thank you very much, Walter. I appreciate that. Okay, let's keep rolling on. If you do have a question, make sure to leave it in the comments, ticker symbol and your question, and I would be happy, get my words straight here, to go over it. Okay, let's check in on Bitcoin, ticker symbol BTC US. Oh, get my cursor back over here. BTC USD, and I use TradingView for all of the charting. There's a link in the description if you want to. They do have a free account. All right, so Bitcoin, we've talked about this every day, and it's in a symmetrical triangle, and we talk all the time about symmetrical triangles and the potential that they have for explosive growth. So if we look here, even though Bitcoin is down from where it was yesterday, it is holding right on this trend line right here. And the candle wick did not dip below the purple support line that you see here on the symmetrical triangle. So Bitcoin, the setup is still here. It looks like another day, maybe 2 days or so, before this triangle starts to close. And then we're going to need to see a move from Bitcoin, whether that's on the upside, which that's what I'm thinking. I don't think it will go to the downside, but again, anything is possible. I have seen these setups fail and break apart before, but 9 times out of 10, they do work. All right, so Bitcoin is up 1.3% on the week, and we can see that because it's basically trading sideways. All right, so that's Bitcoin. Let's check in with Ethereum real quick. Ticker symbol ETHUSD. And you have a few options on TradingView for getting your data. I get it from Coinbase. And Coinbase has earnings coming up tomorrow. They also announced that they're bringing their pro version trading tools over to their main Coinbase trading app, which will be really good. If you haven't used the pro version of their app before, it's lower fees for trading, and they do offer more tools to use. All right, so Ethereum is still looking good. It's holding above its trend line. Really, there's nothing stopping Ethereum from moving right now. If we look at the RSI, it's been holding this whole rally. It's been up here right around the 70 to 68 points. And crypto usually runs hot or higher on the RSI. Okay, so that is looking good. All right, we have another one here. Have you been bearish on Workhorse or Smile Direct Club? What is your take on upcoming earnings? Okay, let's look at Workhorse. I've been, in the past, I have definitely been a fan of Workhorse. I still like the company. I like the new management for Workhorse. I like that they're being quiet because to me, that's saying that they're putting their head down, they're focusing, and they're working and getting the job done. So Workhorse, ticker symbol WKHS. And that's Workhorse Group. They've got the electric vehicle and electric drone. One thing that's really exciting for me for Workhorse is it seems like they have found a bottom, a floor of sorts where they're not going down anymore. And if I draw a line right here, this is or has been the floor for Workhorse right now. and that is sitting at, let's see here, about $6 even. That's the floor. And if I go in here a little bit tighter on it, oh, the volume is just getting in the way. All right, let's go to a 1 hour instead of a 1 day. You can get a better view here. All right, so Workhorse, since it hit that floor, that $6 floor, it has been in a rally here. October 22nd was the last time it was down here, and that was about $6 and $6.13 was the low, and it's been following its 50-day moving average really nice. So if I put this trend line here, and remember, when you're drawing trend lines, it's okay if you have a candle like right here on the 27th of October. This red candle is under that trend line, but it's okay if that happens when you're drawing your trend line. When you're drawing it, you want as many points as possible to touch that trend line. So we start here at the low point, right? And we have one right here, just past that red candle. We have a second point right here. We have a third, fourth, fifth, and sixth touch of the trend line right here. That's what you want to see. When you're drawing that trend line on the chart, let it touch as many points as possible. And if you got one or two that's hanging below it, that's okay, because no chart is perfect. And then after I have that bottom trend line, what I want to do is I want to clone that line. I want to make a copy of it so I get the exact same angle, and I want to go find the resistance for it. So I want to find a spot where as many points as possible are touching, and you should have 2 or 3 at the minimum. Well, of course you need 2 at the minimum, but 3 is even better because you know that it's sitting there real good. So we can see now with those 2 trend lines on the chart for Workhorse that it has been in an ascending trading channel since right here on October 22nd. And that is healthy and that is beautiful. Now, it ran up here a little bit too hot, so it fell down back into its channel here. But the past few days, it has been trading kind of flat, not too much, between about $7.12 up to about $7.24. So it's kind of hanging in there. We're about 5 days away from earnings for Workhorse. Honestly, I have no idea what to expect on their earnings. But if we look here, the estimates for Workhorse is a loss of 33 cents per share and estimated revenue at $895,000. So that's what the street is looking for. That's what analysts are looking for. We'll see if we get that. What I'm looking for, though, myself for Workhorse is I want to hear them say that the truck is solid. They don't have any problems with the truck. They're manufacturing the truck. They're getting orders to build the truck. Those are things I want to hear. I also want to hear about the drone. Now, the FAA approval on their drone, I don't know that it's been announced yet that they've gotten approval, but it's been long enough that they should have heard something back from the FAA on their drone. So I want to hear something about that as well. Those are the main things I want to hear. That the truck is good, the truck can be manufactured, and they have orders and they're building the truck. And then the drone is certified and the drone is ready to go. That's what I want to hear from Workhorse on their call. Other than that, I don't have really any expectations on what could happen for their earnings. So keep that in mind. It's a very speculative investment at this point because they've had a lot of changes over the past 6 months, mainly with new management coming in. Okay, so that is Workhorse. You also asked about Smile Direct Club. We've talked about that quite frequently on the channel here, and that's SDC. Well, that loads. Give me a second. Okay. Smile Direct Club has been in a, let's go back to the one day chart, get out of the 1 hour. So you can see this structure a little bit better. All right, so Smile Direct Club, they were in this downtrend channel, and it was very noticeable, but then they hit, they put on the brakes, and they stopped falling. Now, Smile Direct Club is sitting right here in this symmetrical triangle. Now, it's been moving sideways for the past few days. It's got earnings in 4 days. And right now, estimates are a loss of 14 cents per share on revenue of $182.5 million. So if they can beat those two numbers, then that will be I think, a launching pad to help break out of this symmetrical triangle that it's in right now and move it up. And just for measurement's sake, if we measure from where it is right now to the first trend line, which is that purple line, that's 11.9% move to the upside it could make. If it runs all the way up to the top of the symmetrical triangle, the yellow line, that's a 22.4% gain that this stock could make. And if it breaks out of that, then it could probably go, let's see, we can do a measurement here. You measure the top to bottom, and that's a, wow, 43% move right there. So then if we go and measure 43% from where it is at the bottom of this, I'll put it right over earnings. And if it went up 43%, that would put it at about $7.40 or so. That would be the maximum that I could see it running on very positive earnings, beating the estimates for earnings per share and revenue, and giving good guidance. Guidance is one of the most important things when we are talking about earnings. Of course, we want to see them beat the estimates, but guidance is what will move the stock. Okay, so that's Smile Club Direct. What else do we have? Is Team a ticker symbol? TEAM? Is that? Are we looking at is this what you wanted to look at when you said TEAM? I'm going to say yes, and then we'll look at PayPal right after this one. All right, so what does this company do? I haven't seen it before. Let's go down here. They're up 92% year to date. Let's see. Design, develop, license, maintenance of software, provision software, hosting services. Okay. I don't need notifications. Okay, so a software company. Got it. Out of Australia, Sydney, Australia. That's pretty cool. 124% over the past year, 15% the past month. If we're looking at over the years, that profit margin has been bouncing around, but there's been steady revenue growth. Net income, of course, has moved too because of that profit margin as well. Let's look at a quarterly. over quarters here, that profit margin has been coming down. It has by how much here? All right, so if we look at Q3 21, they have 568 million in revenue, a 28% profit margin. And then we go to a loss of 38% on the profit margin, then a loss of 65% on the profit margin. So my question would be, what did they do over the past 2 quarters, Q4 21, which would be fiscal year, and then fiscal year Q1 2022? What did they do to cause their profit margin to go down like that? That would be my first question. And of course, there can definitely be an explanation for it. Nice beat on earnings. And see, Q4 21, it had this dip in earnings. They still beat estimates, and then a big spike up. But that profit margin went down. All right, so that's just my question. What are they spending their money on that they end up with a net loss on income of $100 million? I'm sure they spent it on something, but that's my question. Okay, let's put a couple of lines on here and see what we're looking at. Let's get all of 21 in here. So this stock was flat for half the year. It's really only picked up since, let's see, 2 earnings ago. Oh, this one is kind of hard to, all right. It's kind of hard to draw a trend line on this one. Just because it's been flat half the year, and it really didn't kick into gear until August. Let's see here. What does this look like? All right. So there's definitely a channel that it's been in since earnings right here in July, the end of July, where it had 24 cents per share EPS on revenue of 560 million. Okay, big gap up there. That's nice. It looks like it's really using that 50-day moving average as its trend line. That looks really good. And then we have another gap up from earnings that were just reported. It ran to the top of this trend line here, and that was resistance, which technically it looks healthy. Technically, the stock looks healthy. It's staying within this trend line all the way up. Even when it dropped, it's staying here at the bottom. So I'd suspect that it could stay in this trend line and trade around in between them as it continues moving in time. All right, let me go look at the financials a little deeper here. On this top box on the right-hand side, you can see this is an annual view that the profit margin, which is that yellow line, it has been bouncing around for the past 4 years. And then we look at the past 4 quarters, it had a nice gain between Q2 21 and Q3 21, but since then it has been dropping. In the past 2 quarters, its net income has been negative. So it has spent its money somewhere for something. I just don't know what that thing is right now. My head's in the way here, but debt to assets has been picking up. Did they make an acquisition of a company maybe? Their debt to assets right now are sitting at 100%. That means their total assets and their total liability are almost equal with how much they have. All right, cash flow. Has actually been improving. They had a lot of financing going into Q2 21, Q3 21, Q4 21, but then financing really picked up there in Q1 2022. Okay. All right. So they spent money on something. Otherwise, I mean, everything looks healthy. It looks good. Let me just look here in the news on it real quick. Let's see, any notable news here about it? Huh. I don't see any specific news about it. But I'm sure if I dug a little deeper, there's something that they have spent their money on, whether it's to improve their systems, or maybe they've gone on a hiring spree or an acquisition of some type. That's what I would dig into. Let me just look over here real quick and see what I can find real quick. Right now, some of the ratings on the stock, it's rated an F for value. It's rated an A for growth. It's rated a D for profitability. It's rated an A+ for momentum. And the revisions that it has made are average with a C. Let's see here. I don't see where it had anything real quick here. I mean, this isn't a deep dive on it, but it's a surface level look at the company. I don't see anything here. Okay. Well, there you go. Oh, it made a transition, a cloud transition. The forecast show cloud transition success. So is it building a cloud infrastructure? That could be. That was back in July when that news came out. So that would have put it back here on these earnings where it gapped up and it started its move to the upside. That would make total sense right there. If it was getting into the cloud game, think of Amazon AWS or Google Cloud, a whole bunch of other ones that are in the cloud too. But if they are getting in the cloud, then it makes sense why the stock woke up, because it was flat for half the year. And then when that news came out about the cloud, the stock started to run. That makes total sense. And that's where the money is being spent. Okay. I hope that makes sense. So that's that one. That's team. All right, let's go to PayPal here. That's what we've got next here. Let's just do this right quick. All right, PayPal. And it's Pinterest fake news, I guess. I don't know what happened with that. It would have been interesting to see how they would have used Pinterest, but it definitely seemed like an odd fit. But it would have been interesting. All right, let's get them up here on the screen. PYPL is the ticker symbol for PayPal. I do hold PayPal to be transparent here. All right, selling off into earnings, which is 4 days away. All right, let's clean this up a little bit. Let's get 2021 on here. Get some of these marks off here. All right, let's see, 2021. It's just moving a little slower than I'd like right now. Okay, here's 2021. It's been moving all around. All right, so over the past year, it's only up 11%. Year to date, it is down 2.5%. The stock has not been behaving well over the past couple of months. All right, so it had a trend line and a trading channel, but it broke out of that earlier this year. We'll call it right here on earnings. Back in July, it gapped down out of its trading channel, and it has not been in it since then. It missed on revenue and only beat by a couple pennies on EPS. Right now, PayPal, it's falling into earnings here. I'm not sure that people are expecting a very good earnings report, but let's see. They're 4 days away. Earnings per share of $1.07 on revenue of $6.234 billion. It's going down right now. Okay, so a lot of this initial fall that we see from October 20th, October 21st, this was that Pinterest news that came out. But if we back all the way up to where it came out of this trading channel that it was in back at the end of July, beginning of August, it has been trading underneath its 50-day moving average, which is a very bearish sign. And if we go back to right before the Pinterest news came out, it was right at its 50-day moving average. And then the Pinterest news came out and just sunk it. And then, it's pretty much been falling ever since. It may be starting to find a bottom, though. And that's something that I'm actually looking for myself, is a bottom. So let's go to the 1 hour chart and let's see if there's a bottom here. Okay. Let me go in just a little tighter. That's not working. All right. I have to do this. There we go. Okay. Now, if we go in here, right here, at 200 and let's call it $25, $225, there is support. We have a candle wick coming down and touching it, and we've got a green volume bar. That's good. We've got another candle wick touching it and another green volume bar. Candle wick, a red volume bar, candle wick red. Okay, candle wick green. So it looks like $225 right now is a floor of support for PayPal. Now, if their earnings are good, then PayPal has got a lot of room to go up. Because if we just scroll back here a little bit to when the Pinterest news came out and all of this falling, I could totally see if earnings are good, there is no reason to believe that PayPal can't at least go back to where it was. And if we go back to the trend line, just a straight line up, of course, the stock won't do that. But if the earnings are good and guidance is good for PayPal, then it could, in theory here, work its way back up to that trend line, which right now would be about a 22-23% upside if it can produce good earnings. Right now, I don't see any other news outside of the whole Pinterest deal. So PayPal is being pretty quiet leading into earnings, that's not a bad sign, especially what happened with the whole Pinterest thing. Okay, so if we look at the earnings and financials here of PayPal, it's a very solid company. And I think PayPal personally it still has a lot of room to grow, especially as we start moving more and more to being a digital society. If we look here, the balance sheet has been getting a little more debt added to it, but this is a yearly look at it. You can see profit margin for the past 3 out of 4 years have been flat. The past year, it has kicked up. If we look at a quarterly view, we can see here that on the income side of things, profit margin has been right around 18%. 3 out of the past 4 quarters, their profit margin 18.7, 18 even, and 18.6. That's where its profit margin is typically at. Q4 2020 year end, that profit margin went to 25%. So if we can see a profit margin greater than 18% when earnings come out, that would be a really good sign. If they can forecast revenue, let's see here. Let me go back to annual. So in 2020, they had revenue of $21.4 billion. Last quarter was 6.3. Before that, 6 billion. Before that, 6.1 billion. Before that, 5.4 billion. So if it can have revenue up there, 6 point something, 6.5 billion, 6.8 billion, that would look really good. And if profit margin can come in 18%, 0.0 up, anything above that, that would look really good too. All right. So that's what I'm looking for earnings that are coming up for PayPal. But again, personally, I own the company. I think it's a good company. I think it's a solid company. I really don't have anything negative that I can think of. Yeah, the valuation sometimes does get rich and ahead of itself, but I like the company personally. Okay, I hope that excellent, and hope earnings will lift up. Thank you a lot. You are welcome. I'm glad that that worked out there. Okay, let's look at what's up next here. I want to look at Pinterest. Okay, we can look at Pinterest. I'll pull them up. PINS, pens. All right, Pinterest. All right, let's go over here. PINS on the chart. Give me a quick second. Sorry about that. Thank you. Okay. Earnings for Pinterest here. Let's see. They were down 3.2% today, but they have shot up quick in after hours. Up 6.3% in after hours. Pinterest beat their EPS by 5 cents. That's good. It looks like their revenue might have been in line. I don't see it reported there. Do I have it over here? Let's see. All right. So Pinterest on the chart. Let's go ahead and draw some trend lines here and see what we're looking at. Let's go back to the 1 day. Usually when I'm drawing trend lines for an overview of something like this, especially when I haven't drawn any in a while, I like to go to the 1 day view. Holy moly. Let's reset this. There we go. All right, let's get the whole of 2021 on the screen. Oh, wow, it has been very choppy. I think Pinterest does have potential. I don't think it's reached its potential yet, though. All right, so if we put that trend line there, and let's clone that and find resistance. And again, we want to get at least 2 to 3 candles to line it up. And it's okay if you have a candle protruding above or below it. That's okay, as long as there are many other candles that are on the line. So we've got, starting here, back on February 12th, and you can see it's in a very defined downtrend. Even though it's got these wild swings that it's making, and these swings, let me just measure this rally right here. That was a 46% swing. So it's making some pretty big swings when it moves. And even though this is in a downtrend, this can have a really good swing trading setup to it. For example, if you got in here at the bottom and you started to ride this rally up, that was over 40% gain on that one rally right there. So you can swing trade even if it's in a downtrend. That's what technical analysis is all about. Okay, so leading into earnings here, we had a nice run up. It became oversold. It got all the way up to a 76 on RSI. And remember, 70 and above is oversold. 30 and below is overbought. Wait a second. I said that backwards, didn't I? Shame on me. Shame on me. 70 and above. Okay. Big green volume candle there. And then a big drop. All because of news. Okay. All right. So Pinterest is just a company that it hasn't reached its stride yet. I don't think it's really figured out exactly what it I don't know. I do like the company. I mean, you look at the right here on the right hand of on the screen here. These little dots right here are earnings. And you can see, I mean, they're up and then down and then up and then way up. I mean, they're moving all around. There's no consistency. And then if we open this up even bigger here and we go to the quarterly view, over here on the right hand side, just above my head, these green and gray dots right here, this is earnings. So you can see here that they had, this was Q4 2020, and it reported a 43-cent EPS, right? And then Q1 2021, and it reported 11 cents per share. So a big drop, but still beating estimates. And then it goes up a little bit, and then the next one is up much further, which is right in line where it was Q4 2020, So Q4 21 is also up there. I guess they get more advertised spending on their platform towards the end of the year, which makes sense because that's usually when platforms that are advertising heavy, that's when more ad spend comes in at the end of the year. All the companies with budgets that are left unspent, they just go and spend them during the last quarter of the year just to do it. And then we look here on income, and you can see the profit margin on Q3 2020 was a loss of 21%. It went up to a gain in the positive of 29%. And then Q1, it was a loss of 4.4%. Q3, a positive of 11.2%. So the company is it's just all over the place. And when the finances are all over the place like this, that's when you end up with a stock chart that is all over the place, just like you see here. So long term, the company, it's got to find its legs. And once it does, I think the company can be successful. It's definitely a popular platform. But my suggestion for Pinterest would be to swing trade it. You know, there are excellent moves that can be made here, swing trading this, even if with the downtrend, because things don't go down all the time. There are times when it goes up. So I would just pay attention to news and technical analysis on Pinterest. Earnings are coming up. If earnings come out and they're really good, you could use the PEG trading strategy to make a quick profit off of it. And the PEG strategy is a power earnings gap trading strategy. You can Google that and look that up. It works really good on earnings and growth companies when they can gap up. I mean, you can make a nice trade, nice setup and trade there, but you got to be paying attention because it can swing in the opposite direction real quick too. All right, but Pinterest has, I mean, it's been 1, 2, 3, 4, 5, 6 quarters in a row that it has met or exceeded earnings. And then we get to the loss, which was back in May 2020. Okay, so that's Pinterest. Who are we looking at next? You are welcome. Glad I could do that. Yes, exactly. I swing traded a couple of times for close to 15% profit each. Yeah, that's great. Great. Yeah. Excellent. Yes, exactly. I swing trade. Yeah, good. No, swing trading, it works for this for Pinterest, definitely. Okay. Well, if that is if you have any other questions, don't be shy. You can put the ticker symbol in and we will look at it together. And yeah, okay, good. Moving on, let's see here. Sold a put for $44, got paid 200. Yeah. Yeah, options trading is a strategy that you can use, and it works good. It sure does, especially when you can find stocks that are in a very defined trend. Those trends can be your friend. I mean, that's how the saying goes, right? The trend is your friend until it's not. But yeah, okay. All right, let me plug in Square. Since we looked at PayPal, Square ticker symbol is SQ. They had earnings today too. All right, SQ for Square. Let that load for a second. Okay, so Square had earnings today. Q3 21 EPS of 36 cents, which was in line with estimates, and revenue of $3.84 billion, which was a 26.7% year-over-year gain, but they missed estimates by 640 million. That's why the stock is down 4.7% in after hours. In Square here, it's had a pretty tough time too this year. But again, you can find really good swing trading setups. I mean, just look at that. All right, I'm not going to draw any lines on here unless you want me to. Let's go on to another one, Redfin, ticker symbol RDFN. Since Zillow has gotten beaten up, there we go, RDFN for Redfin. Since Zillow's gotten beaten up quite a bit, Redfin, they reported their Q3 21 EPS at a loss of 20 cents, which missed estimates by a penny. They had revenue of 540 million, which beat by $4.89 million. They were up 8.2% on the day, but they are down 2.26% in after hours. They're right about $50.15. And Redfin, it's been one. I had Redfin last year. I sold it in February. Haven't bought in yet. I've been waiting for a bottom, and it's almost like, we might be finding a bottom here for Redfin. Maybe around $45 might be it. Maybe $50. It's kind of hung around in between there before. So I'm just kind of waiting on a bottom for Redfin. Okay, another company that reported earnings today is Carvana. Ticker symbol is CVNA. Let that load there. All right, Carvana, it is flat in after hours. It hasn't moved at all, and it didn't move today either. And what's interesting about where they are at right now is they are using their 200-day moving average, and it's a simple moving average, as support. For the past couple of days, it had moved above it, and it's been using it as support. And it's just flat, and it's kind of trapped in between its 200-day moving average for support and its 50-day moving average as resistance. Now, they reported EPS of a loss of 38 cents, and they missed by 11 cents. Now, their revenue was $3.4 billion, which was a 126% year-over-year gain, and they beat revenue by $220 million. Now, since they are making less of a profit with their money, that's why the stock did not move on this earnings. I guess I would call it in line, since they missed on EPS, but they beat on revenue. It just means they're making less money with the money that they have. So they haven't moved at all, really, based off of this new information for Carvana. Okay, Amazon was revisiting its October high today, ticker symbol AMZN. They've been going down lately, so I'm wondering, where is their bottom going to be for Amazon? And you can see this thing all over the place. I mean, look at this big gap down right here off of earnings, and then an earnings miss right here. The stock has just been up and down and up and down. Great for swing trading again. A lot of these companies we're finding here today are good swing traders. Okay, so that's Amazon, just real quick. And just a couple other names I want to mention real quick. Tesla got a new all-time high today. Lowe's got a new all-time high today. Nike got a new all-time high today. Tractor Supply, new all-time high today. McDonald's, new all-time high today. And then SunPower, well, it sunk lower today. We talked about them yesterday, but let's just look at them again real quick. SPWR is the ticker symbol. Now, I dug into their earnings last night and read a little bit about it, and there's something interesting that I think will be good for the company going forward. Now, you can see they had this beautiful rally in October. Most solar energy, electric vehicles, a lot of them had nice October rallies, but it has since sold off some here. And right now it bounced off of its I guess I would call it its 200-day or 21-day, that gap between there. It bounced off of that last night, and then today it was back up here to be at 32.71, flat after hours. But there's something I'm thinking about here for SunPower. Even though it was a bit lower today and it has come down some since its earnings, SunPower has a residential story that I think will make this a good candidate for a long-term buy and hold. The company bought residential solar provider Blue Raven last month for $165 million, and it wants to sell its commercial and industrial business. Now, SunPower said that it added more than 14,000 residential customers in Q3, and that was up 29% from a year ago. And gross margin for the residential division, well, it jumped 24% year over year. SunPower's residential solar business is highly profitable, and that's why I like this company for a long-term buy and hold. Now, another company in the same solar space that reported earnings today is Sunrun, ticker symbol RUN, RUN. Now, Sunrun is one that I hold. I really like this company. They were down a little bit today, about a percent during the hours and 1.7% down in after hours. Now, they had a beautiful rally in October as well, and they've kind of slowed down a bit here over the past few days going into earnings. Now, their EPS of 11 cents, well, that beat by 10 cents, so that was good. And they had revenue of 438.7 million, which was a 109% year-over-year gain, and that beat by $25 million. This stock should be moving more than it did today. That is incredible numbers in my book. And I also think that Sunrun is a long-term buy and hold type of company. Okay, a company that we've been talking about several days now in a row. It got beat up today, but I think that's a good thing. And that's Matterport, ticker symbol MTTR. Matterport, they're going to be huge in the metaverse space. I mean, what they do is exactly what you would expect a metaverse type company to do. They're taking the digital world, the physical world, and they're making it digital. So that's awesome. Now, Matterport had this symmetrical triangle set up right here, and it broke out of that hard, and it went up nice. Anybody who was riding this right here, this setup, that went all the way up right here at about $25 or so, but that was a 32% gain over just 2 days. Now, it's falling down. It fell hard today. It was down 13% today, but I see this as a buy the dip opportunity for Matterport, because this puts them where they fell today, right around the $20 and some change mark. That is a good level of support for them. They could go down, maybe dip under 20, but I think that's okay. Again, for me personally, not financial advice, but for me personally, that's a buy the dip opportunity for Matterport. I think this company has got a huge future ahead of it. Okay, stepped in front of Matterport this afternoon, hoping to catch the bottom. Yep, me too. I added today as well, and I'm actually kind of hoping it goes down just a little bit more. Just for me personally, I hope it goes down a little bit more, just so you get a better deal. You can dollar cost average your way into it. But yeah, I think this is another. You can swing trade it if you want to. Me personally, this is a buy and hold long term. And when I say long term, I'm thinking 5 years from now or 10 years from now. That type of buy and hold stock. I think Matterport has got a really bright future ahead of them. Anyways, so that's Matterport. I know we've talked about it several days now. So that's that. Valkyrie, who has the Bitcoin futures ETF. There was a little bit of news from them today, but they filed for a U.S. innovative balance sheet ETF, which will hold companies that are exposed to Bitcoin, like MicroStrategy, like Tesla. They will also hold companies who are like miners and so forth, like Hut 8 Mining. So I just thought that was another interesting take on the whole Bitcoin ETF and how they're trying to walk around this. They won't let a straight one-for-one Bitcoin ETF come into the market, but these ETFs are popping up that are indirectly linked or future contract linked to Bitcoin. It's just more, I think, good news for cryptocurrency. I also think that if we can get some sort of regulation for crypto, I don't think it's a bad thing. Just something like a framework for crypto, I think it would allow more people to be able to invest directly into Bitcoin and other cryptocurrencies. Just my thoughts on that. Okay, there's a couple of stocks that I wanted to dive into a little deeper. The first one is Etsy. Okay, I know we've been here over an hour now. That's okay. I'm glad to answer your questions. If Etsy's on your mind, I do have a couple things about Etsy. Ticker symbol is its name. It's ETSY. Etsy. So that come on the chart here. Now it had a great day today. It was up 13%. And it's in, there we go. It's in what is called a bilateral pattern, and it's an ascending triangle. Now, the way you can point those out is when you draw your trend lines for this wedge or triangle shape, the top line should be flat, while the bottom line should be in an uptrend, okay? And that's an ascending triangle. Now, I've got an example of the complete opposite of this, where it's in a downtrend, where the bottom is flat, but the top is coming down. But anyways, this is a flat bottom, and you can see that purple line going flat across the top. That's resistance. But the bottom purple line, it's running right along with its normal trend line, maybe a little bit shorter, but it's forming that. And usually it's a breakout. And today there was a breakout forming, and it did off of news of earnings. So here's my thoughts on Etsy. Flatten after hours, by the way. So Etsy, it's making its investors feel like besties today. The stock is surging higher, or has surged higher, after the company reported its Q3 results and guidance last night. This was an important quarter because Etsy closed on two key acquisitions in July. Etsy acquired Depop, or I guess it's Depop, DEPOP, which caters to young people and operates an online marketplace for buying and selling secondhand fashion apparel and accessories. And it bought it for about $1.62 billion. Etsy also bought ELO7, not quite sure how to pronounce that one, which is known for its Etsy of Brazil type of naming, or framing, I should say, for $217 million. The early returns look good. At first glance, the headline numbers, they don't seem to warrant such a huge move in the stock's price. EPS topped expectations, but represented Etsy's smallest beat in 6 quarters. Revenue, well, it exceeded the high end of prior guidance. However, Q4's revenue guidance was good, but a bit below estimates. And Etsy is guiding to a sequential decline in adjusted EBITDA, which is estimates, earnings before taxes guidance, and so forth. So why is the stock reacting so positively? Well, for one thing, Etsy tends to be conservative with guidance. In Q2, Etsy guided Q3 revenues below estimates, but wound up reporting above the higher end of the range. I think that some of the things that could be happening with the Q4 guidance for both revs and earnings before taxes and all of that, better margins, basically, investors are not buying the guidance anymore. During its earnings call, Etsy commented that its massive peer-to-peer fulfillment ecosystem is a big advantage. Most of its products are made by sellers at home. Therefore, Etsy should not suffer the same supply bottlenecks, the ports that are backing up with these big containers, people looking for space to store these big containers, truck drivers not allowed to drive in certain states, so we've got a truck driver shortage. Well, Etsy, it doesn't have those same problems as the bigger box stores. This holiday season, that typical retailer is facing that type of bottleneck and supply chain problems. Etsy's not. So its 5 million sellers, they're distributed around the world. Overall, the Q3 results were quite good. In the past, I would fret that Etsy's sometimes light on guidance, but I have come to learn that the company's outlook tends to be conservative, and I think other investors are thinking the same thing. I think it's important that investors understand Etsy's distinct advantage in terms of supply chain, supply bottlenecks relative to other retails this holiday season. You will not be hearing about supply constraints on its Q4 call. Mark my words. If they do, let me know. I want to be held accountable. Okay, that's what I think about Etsy. Now, what's the other company I want to talk about? Oh, yes, Qualcomm. I want to talk about them. We looked at them yesterday when earnings came out, but ticker symbol QCOM is the ticker symbol. Now, there's a couple things that I picked up here on them. Huge gain today, up 12%. And here it is again. We've got a wedge shape. We've got a triangle pattern. What happened? An explosion. A missile got shot out of it, and it's all the way up here. The price is all the way up here. Now, this is the opposite of what I just showed you. This is a descending triangle where the bottom trend line is flat, but the top trend line is going down. Okay, so this is a reverse of what I showed you there. Now, again, when you see these triangles forming, when it gets to the nexus point down here, it is going to jump. And that's exactly what QCOM did here on its earnings. Massive jump right here. That is a nice gain for anyone paying attention to it. Now, here's another thing I want to point out for these triangles and wedge patterns when you see them. When they're expected to move up, they typically move up to around the top of where it started forming. So if you draw a line straight across here, it comes in just shy of where this started to form. You could almost say it formed here because there was this gap down, but it did form up here at around the $167 mark. So it's about $9 or so, $10 or so shy of that, I guess you could say, price target. But there was a gap down here, so that should be taken into account too when you're looking at charts and trying to figure out where something could go. Okay, but back to Qualcomm. All right, so badly underperformed the broader market prior to yesterday's impressive beat and raise Q4 21 earnings report. Those concerns, which sent shares lower by as much as 17% from mid-August through mid-October, were seemingly confirmed when Apple, ticker symbol AAPL, reported disappointing quarterly results on October 28. The technology behemoth Qualcomm, Apple. Apple is the behemoth, which accounts for about 10% of Qualcomm's total revenue last year, showed that even it isn't immune to supply constraints as chip shortages cut into quarterly sales by more than $6 billion. What Qualcomm's better than expected Q4 results and upside Q1 22 guidance illustrates is that the company is no longer overly reliant on Apple for the seasonal launch of new iPhones and iPads. This revelation and the associated understanding that Qualcomm's, diversified business, their business model, is now benefiting from a mix of different catalysts. Has the stock recouped its losses from the prior few months? Well, relatively, Qualcomm's strength is providing a significant lift to the tech-laden NASDAQ, which is outperforming the other major indices. The most encouraging and bullish aspect of Qualcomm's report is its Q1 guidance for EPS of $2.90 to $3.10 versus the $2.59 estimate that it had, and revenue of $10 to $10.8 billion versus estimates of $9.7 billion. Along with the new $10 billion stock buyback program that the company announced on October 12th, the robust outlook expresses Qualcomm's belief that the supply chain disruptions will end soon. It also reflects the increasing strength in two up-and-coming markets, namely the Internet of Things, IoT, and automotive. To conclude on Qualcomm, not only did Qualcomm largely erase the supply constraint concerns that have plagued the stock over the past few months, but it showcased a new and improved business model that is more diversified and in line with emerging growth opportunities. the Internet of Things and automotive markets, electric vehicles. All right, so that's my thoughts on Qualcomm. I think it can do better, and I think it will. Okay, another one that I was working on and going through their earnings is kind of an oddball, but it predicted something that turned out to be true. I only wish I would have brought this up and talked about it yesterday or maybe this morning or something, because my prediction came true 100%. The company's Planet Fitness, ticker symbol PLNT. Now, Planet Fitness has gotten wrecked with the pandemic. It was up 11.6%, and it was almost in a symmetrical triangle with the top and the bottom equally moving, but it was just at a very the angles were not precise. When you're looking at it, it just doesn't look right. However, excuse me. Oh, excuse me. I apologize. This trend line right here, okay? What I think I should have done is once it broke this triangle down here, what I should have done is I should have taken this top line and I should have moved it over here like this. And then I would have caught 1, 2, 3, 4 different points, okay? And then if you kept this bottom one right here, this would have been more of the symmetrical triangle that it was in. Even though it was trading kind of flat here with just mild swings up and down, it really broke out when it did. I mean, look at this top line here, and then look at the price where it is all the way up here on the chart. Now, this would have been a descending triangle, but the pattern broke. Whenever a pattern breaks, excuse me, you have to rethink what is happening. Just like investment thesis. When you have an investment thesis on a company and some news comes out that changes things, you have to adjust your thesis. Just like you have to adjust your technical analysis when something breaks, okay? I just want to point that out because not everything is so black and white. When you're investing, things are fluid. It's constantly moving. So just keep that in mind with your investment theses and your technical analysis. But what I want to say about Planet Fitness, and then I'll wrap this up, is that their shares are on another planet today. They have jumped so much, 11.6%. Now, this is a fitness center franchise and a operator, okay? So people can, like Subway is a franchise, McDonald's franchise, okay? That's how this setup is for the company. It's their business model. But they posted its first earnings beat in 6 quarters. That's right. They have lost for 6 quarters in a row. They beat this past quarter. The company also saw revenues leapfrog 46.4% year over year to $154.3 million in Q3, making or marking one of its best revenue growth quarters, second only to Q2's explosive 241.1% growth. Revenues are now off only 7.5% from where they were in 2019. I think this is quite notable given that the pandemic wreaked havoc on the whole fitness club industry, prompting the shutdown of facilities, sometimes permanently. In your town where you're at, how many companies have been shut down permanently and have gone out of business because of the pandemic? I feel horrible for companies, especially mom and pop shops that had to close and could not reopen because of the pandemic. I feel horrible for those people. And I only wish that some good luck and good fortune falls upon them. I've been a business owner before. I understand what it's like to own a business, and it can be your baby at times that you take care of. So I want to add that little message here. Okay, back to Planet Fitness. Not only did it survive, but it didn't permanently close a single facility. Not a single facility closed for Planet Fitness permanently. Not a one. That is amazing. And that's no small feat, as the fitness club industry as a whole estimated that over a fifth of all fitness and health clubs in the US permanently shut down due to the pandemic. Again, my heart goes out for all of those people in business. But in Q3 for Planet Fitness, it grew its earnings per share to 25 cents a share, up significantly from EPS of 2 cents in Q2 2020. It was the company's wildest beat in 5 years. Overall, Planet Fitness is emerging as an excellent play on the fitness industry, which has seen significant uptick in demand since the pandemic began. For example, Lululemon, ticker symbol LULU, has been on fire lately, led by strong demand for its fitness apparel. The company's at-home fitness mirror also continues to be a bright spot. I have also seen the pandemic create strong demand for outdoor recreation with companies like Academy Sports and Outdoors, ticker symbol ASO, and Dick's Sporting Goods, ticker symbol DKS, seeing quarterly revenue growth driven by continued fitness-related purchases. Planet Fitness has also noticed that the pandemic was taxing on mental and physical health, leading to an increased focus on improving overall wellness for everyone. Lastly, Planet Fitness commands a competitive advantage in its ability to find success where big box stores failed, purchasing abandoned buildings and turning them into fitness clubs. This allows the company to keep costs down, which translates to cheaper membership fees than competing health clubs, which during an inflationary environment should help give the company a boost in memberships. On a final note, and this is what I wish I would have mentioned earlier when I was looking into Planet Fitness, I thought them doing Planet Fitness, that since they were doing so good, that it would paint a gloomy picture for at-home fitness equipment manufacturer Peloton, and it sure did. Let's plug in Peloton. PTON is their ticker symbol, and look at this. They were down 4.2% during the day. They are down 28% in after hours. That's right. Peloton is down nearly 30% in after hours. Why? Bad earnings. That's why. Because people are going back out into the world. They are going to places like Planet Fitness, and they are not purchasing as many health products like Peloton's bikes. I hope that you didn't get hurt in Peloton, because looking at what's happening right now with companies like Planet Fitness, the stay-at-home play could see some serious trouble going forward, especially companies like Peloton that did excellent and made tons of money, during the pandemic. Okay, that's what I had to say. I know I got a little personal there when talking about Planet Fitness, but being an entrepreneur, it's something that really sinks in with me because I've owned a few businesses in my life, and being a business owner is a great feeling. Lots of stress, I'll tell you that, but it's a good feeling. But you have a ton of responsibility, especially the responsibility of other people. That's one of the biggest things. And it's one of the biggest things that can move you as an entrepreneur too. So if you're thinking about being an entrepreneur, go for it. Don't sit back and wait. Uh, you don't succeed without failing. And failure is not failure. Failure is learning, and failure is growth. We don't learn without failing. So if you're thinking about starting a business, I know we're talking about investing here, but just as a side note, I was thinking about being an entrepreneur today with your note there. So if you do, go for it. Okay, we've been on here a while today. I did want to talk about Roku for a minute, just because there was a couple interesting things that I saw. I'll just plug them in and go for it. Why wait, right? ROKU is the name and the ticker symbol for Roku. Plug them in. They haven't been doing so good the back half of the year. What are they on the year right now? Let's see here. I mean, every quarter they beat on everything, but they're down 12% year to date. So yeah, they have not been performing good. But Roku, it's the streaming service, right? So they released their Q3 results last night. Now, Roku reported strong EPS upside for Q3. However, the company also issued weak Q4 guidance, and that announced weak net sub additions also, and offered cautious commentary on ad spend. So not looking so good for Roku. Now, the bottom line here for Roku, I just want to get this out real quick. This was a rough quarter. Roku was hit with a double whammy. Component shortages hurt TV sales from its OEM partners, which hurt excuse me, I'm losing my my thought here. Which hurt subscriber growth, because if they're not selling their TVs, they're not selling their streaming sticks, then they're not adding subscribers, right? I mean, it's a pretty simple equation to figure out. And because of the component shortage and its impact on manufacturing, some customers, understandably, saw less need to spend on advertising for products that they cannot make quickly enough. Despite what should be a few difficult quarters in the near term, I remain a fan of Roku's model. Ad spending on streaming lags spending on regular TV by a wide margin, but the gap should come to a close over time. So that's it. Just real quick, my thoughts there on Roku. Okay, that's everything that I wanted to talk about today. Wow, what a good show today. Thank you all so much for all of the questions. That is the best part of this show. If you are watching the replay of this show, just make sure to leave the ticker symbol and your question in the comments, and we will go over it live during the show tomorrow, Friday, right? The end of the week. All right. So if that is everything, I think we don't have any other questions. I'll wrap it up for today. And thank you guys so much for being here with me. I greatly appreciate it. It is an honor to answer your questions. So thank you all so much for joining me, and I will see you in the next video.